Bitcoin angel investments so far is a company called BitPay. That doesn't mean there won't be any more, but for now, I think that's more than enough.
Naval Ravikant, founder of AngelList, just obsessed with Bitcoin like everybody else here, although a bit of a latecomer, investor in Corbit and a stealthy miner in the Bitcoin ecosystem. Outside of Bitcoin, I'm an investor in about 100 companies, including Twitter and Uber and Yammer and a few others.
Ben Davenport, engineer by trade, Microsoft, Google, some step off in high frequency trading in New York, followed by founding Beluga, which we sold to Facebook in 2011, which became Facebook Messenger. I discovered Bitcoin that same year, May 2011. Pretty much obsessed ever since. Started investing more broadly across the ecosystem starting in 2012 with BitPay, and then 5 other companies since then. ItBit, CoinSetter, couple, NYBX, which Lightspeed mentioned earlier in the day, and then one other I won't mention because they're not public yet.
So we have lots of questions that have been coming in. There's lots of other topics that we can discuss. But before we start that, I'm curious to know, how many investors do we have in the room? How many of you made Bitcoin investments so far? And how many of you are still looking to make more Bitcoin investments? That's a fair few number. So yeah, so we have about 40 minutes. I was hoping to go through about 30 minutes of questions, and then we can take, or 30 minutes on the panel and 10, 15 minutes worth of questions. So I guess the first question that comes to a lot of people's mind is, if you're looking to do investing and you have appetite for higher risk, which angel investment always is, should you be investing in Bitcoin companies versus investing in Bitcoins themselves? I'm very curious to hear your answers to this.
Yeah, so I think the answer is yes to both. I think as an angel, I think it probably doesn't make sense to be investing exclusively in companies while not also holding a base position in coins themselves. And because, for most of its history, I think it was pretty clear that the lower risk, higher return bet was to buy Bitcoins. This was certainly true in 2011, 2012, most of 2013. Now we're at the sort of valuations, $7 billion current mined market cap of Bitcoin, where, if you're looking early stage as an angel investor and low enough valuations, you certainly can conceivably outperform Bitcoin itself because you can grow rapidly enough. But I think you should think about it holistically and sort of think of how those, you can't think about those investments necessarily in isolation. You ought to always consider how they might affect your underlying Bitcoin position. So I'm willing to invest, say, 1% of my Bitcoin into a company that I don't expect to outperform Bitcoin by itself, but I believe that company might make the rest of my Bitcoins worth 10% more. So I think you have to consider it as a totality. And I think this is an advantage that angels have versus maybe some of the institutional investors, where the institutional investors may not have the LP agreements in place to directly hold coins and to be able to think in that manner. And they only have a charter to invest in companies. So maybe that's an advantage. And the other thing is I wouldn't say that everybody should feel like they have to go invest in the ecosystem. I think simply by holding Bitcoins, that has characteristics of an angel investment in and of itself. It's like an ETF on the entire space. And if you don't feel like you have the ability to go and pick companies, pick winners from losers, it's better to buy and hold and send signals in terms of the price to good entrepreneurs to come pursue the space than to go, say, waste that investment on something that isn't that valuable.
Naval?
Yeah, it's a really interesting question, and we could spend 40 minutes on just this one alone. And I'm sure most of you who have invested in both Bitcoin and in startups have seen your Bitcoin appreciate in value more than the underlying startup and been liquid the entire way. So the right way to think about it is, as Ben said, buying Bitcoin is like buying a bet on the entire ecosystem, on every company, every transaction, every piece of activity, no matter where it's happening. There is some break-even point at which, either for charitable purposes or because you believe that now the Bitcoin are fully valued, it makes sense to go ahead and start investing in the ecosystem. Investing in the ecosystem is hard because one of the dirty secrets of Silicon Valley and tech companies is that they make inordinate returns by essentially becoming natural monopolies. And Bitcoin is decentralized. It inherently resists centralization. It resists monopolization. So in that sense, the companies that are going to be born and grow up in the Bitcoin ecosystem are less likely to have those monopolistic or network effect characteristics to them. It's easy to imagine if Bitcoin fails for whatever reason, the companies would probably fail too, but it's hard to see Bitcoin failing and those companies succeeding, whereas vice versa is absolutely possible. So for me personally, at the current valuation, there's sort of a break-even point where I look at investing in some companies and look at buying Bitcoin. Certainly at $1,000 a coin, I was looking more at ecosystem investments. At $12 a coin, which I was not fortunate enough to get in on, but for those of you who were, at that point it made sense to buy the coin.
Here at 12 cents.
Yeah, amazing, good. You're buying lunch or dinner. But at that point, it definitely made more sense to invest in the coins. I also think that when investing in coins, one shouldn't just look at Bitcoin versus the angel investments that are possible. One should also look at the altcoins, or as I kind of like to call them, app coins, coins that are enabling. The distinction between app coins and altcoins is altcoins might just be an alternative currency, and app coin would be enabling a specific application that Bitcoin itself does not, although an app coin may run on top of Bitcoin. So it could be like a master coin or an Ethereum or a zero coin, where it's doing something either that Bitcoin cannot or will not. So it can be a choice on the part of the Bitcoin developers, or it can be just a technical capability that one can't introduce into Bitcoin without compromising the security or the functioning of the blockchain. So I think there's a lot of different ways to play in this space, and you just have to constantly do that trade-off. Probably the most important thing is hold Bitcoin, but only the ones that you're willing to lose. It's a lottery ticket kind of bet. And then on top of it, make targeted investments where you think someone can have a sustained comparative advantage in what is fundamentally a decentralized system. So that kind of has its own set of characteristics to be valued against.
I think it's worth pointing out that investing in the ecosystem can be risk reducing in a sense, that because companies that build up businesses around a cryptocurrency, which happens to be Bitcoin today, can be flexible enough to adapt if the Satoshi blockchain is not the ultimate winner for some reason.
Yeah.
So those businesses can adapt, whereas if you're simply holding coins, you're fully exposed to that, potentially that blockchain being supplanted by something else. And at any time you're holding a significant amount of Bitcoins, you need, as Naval says, you need to be paying attention to kind of these other experiments that are going on, alt blockchains, and evaluating whether any of them sort of represent a credible threat.
Yeah, so as I said, there's a point of view of the world that says that, at least in the near term, all the value in the Bitcoin ecosystem gets captured in the Bitcoin value itself. So if Bitcoin's mainly used as a store of value, like a gold, then you would expect most of the value would accrue to the Bitcoin themselves, and holding the Bitcoin would be a very good way to capture that value. There's another point of view that says that it will take off as a currency or some kind of a transaction mechanism in the near future. If that happens, the majority of the value won't stay in the Bitcoin, it'll flow through the Bitcoin. For example, if you look at gold, almost all the value in the gold ecosystem is in the gold itself. You don't really invest in companies that move gold around, you hold the gold. If you look at dollars, most of the value is actually in the assets, it's in the land and the businesses and the companies, and that money flows, and that value flows through dollars when it needs to be transacted, but it doesn't necessarily live in the dollars, other than the sense that people have a liquidity preference, so they hold some small amount of dollars. So depending on which view of the world you have, it gives you a different answer on whether you want to invest in the companies or hold the currency.
And I would say those probably aren't mutually exclusive.
They're not.
I think
yeah, they're additive.
Both use cases can happen.
But if you look at most of the value of Bitcoin, I believe, at least today, it comes from the store of value arrangement and not from the medium of exchange arrangement. Because the medium of exchange, Bitcoin is very liquid, very fast to transact. And so the need to hold a lot of Bitcoin is actually, for transaction purposes, very low.
Yeah, I mean, a lot of people analogize to gold, talking about gold 2.0. I agree with that analogy. I mean, it's how I sort of came to see the value in Bitcoin itself as a better gold than gold. But, you know, the caveat with that analogy is it has basically zero characteristics similar to investing in gold today. It's much closer to investing in, you know, an angel investment. It's really gold 2.0, 0.01, right? I mean, it's you know, I think, and the interesting thing is you're not just investing in gold, you're investing in gold that can potentially change and upgrade its properties.
Right.
So maybe you're call it alchemy in a sense. You know, if you're investing in stuff that's in core development, or maybe just things that the core developers are doing to push the protocol forward, this substance that you invested in can take on new properties.
Yeah, I think one of the reasons why people have such a hard time, especially people who are not into Bitcoin and don't understand it, have such a hard time relating to it is because it's a language, it's a currency, it's a protocol, it's a database. You know, it's so many.
It's a dessert and a
it's so many different things that's getting upgraded all the time. There's so many innovations present in it that it is its own thing, and that can be hard for humans to wrap their heads around. But at the same time, when you try and you realize how unique it is, that's what brings you to a place like this, because you realize it is its own thing, and you're not going to figure it out on your own.
So Ben, you've invested in about 5 or 6 companies. I'm very curious, and I'm sure the audience are, how many companies have you actually looked at? And that's not just the random guy who's going to shove his app in front of you when you walk out and going, hey, I'm building a Bitcoin company, I'd like you to invest. But where you've actually spent time and done some sort of diligence and walked away from a deal in something which you were originally interested in. I'm very keen to see if that compares to the normal startup ecosystem.
Yeah, I mean, I don't, off the top of my head, I don't know exact numbers, but probably kind of looked casually at 40 to 50 and then maybe like closer and met with the founders on, say, 15, like maybe 20 or so, I would guess.
And what would the reasons be from the ones you walked away? And I'm quite happy sharing my thoughts on it, because I've probably looked at a similar number of companies, and I've done 1 or 2 if you take CoinDesk, but ultimately that was a bet on an idea I had, and I didn't have to justify to a third party, and I invested in BitPay. Personally, the reason why I walked from most, and I guess the landscape's changing, because 18 months ago, you'd raise the topic of regulation. There was a topic people really didn't even want to discuss, and hope was the strategy.
Yeah.
You know, now we're seeing 18 months later, the first thing is like, oh, we've already hired our general counsel. We don't have a product yet, but we've hired our general counsel. So I think the market's maturing, even though it's a very early market. Curious to hear what different reasons you would have had.
You know, I think the reasons on things where you don't invest are not necessarily that different from reasons you might not invest in another company. All those reasons exist. You know, maybe not as much, zero or little traction. You know, maybe you don't have confidence in the team or lack of technical founder on the team. All those still apply. And then there are, I think, probably some additional factors, risks, such as, you know, not taking regulation seriously. You know, or, you know, simply not, maybe, you know, and some of it's just like what I prefer to invest in, and how I'm thinking about investing going forward is trying to invest in things that are not just doing like, okay, we're going to do X with Bitcoin, where X already exists elsewhere. I want to invest in things that are trying to enable fundamental new use cases or providing leverage across all the other businesses in the ecosystem. Things around security, perhaps, you know, multi-sig wallet or other technology that is going to get built into exchanges.
And if you look at the media coverage over the last couple of months, you know, we've got Mt. Gox on one side. I actually looked at Mt. Gox. I did have the pleasure of going out to Tokyo and spending a bit of time there, and I'm quite glad I got on the next flight out and never went back to wherever Mt. Gox is.
Shibuya.
Yeah, Shibuya, back streets of Shibuya. But you take BitPay, you take Coinbase, and you take Zappo.
I wasn't in Coinbase, Coinsetter.
Okay, Coinsetter. But if you look at the high valuations and the funds being raised, and Bitstamp, they've obviously just announced, the period hasn't been that long that we've gone from. And I remember the conversations I had, and there's a couple of individuals here who are also BitPay investors, and we called up some very seasoned entrepreneurs and financial investors, said to them, there's this great company in Atlanta, we think you should look at it. And someone I work very closely with said, oh, I just spoke to my friend who's involved in foreign currency and said, keep well away from this. To me, that was similar to when I invested in Spotify. If I had mentioned it to you and you said, oh, I just phoned up my friend who works on a record label, and he said, keep well away, because obviously the people who are going to tell you to keep away are the ones that are about to get disrupted. You suddenly look 18 months later, and we're in a very, very different position where every Sand Hill Road venture capitalist has had at least more than one meeting. There's probably one partner in every fund dedicated who, for good or bad, walked in one day and said, right, you're the Bitcoin guy now, and he started reading up everything.
Well, a number of firms have had Bitcoin education sessions where they'll bring in people who they think, I've been called in a few, and if you're calling me, and then, wow, you're starting at ground zero, right? Trying to get educated on Bitcoin. But they're ramping up.
That was one of the reasons for CoinDesk. So when we started CoinDesk, it's like, where do you even go to read up any information? And it's like, well, there's lots of mining stuff, but, something in plain English. And was our sole reason for putting out something which was readable for the mass market. But what I'm trying to say is the ecosystem is moving very, very quick, and we're still, day 2 or day 3. Are the next, that's 3 companies I mentioned there, are the next wave of companies, in your opinion, already being thought of? Have they already been funded? Or haven't they even started yet? Because there's going to be various waves in digital currency. I'm very keen to hear if you think there's companies that which we may be missing. Blockchain is a prime example, right? They're a kind of a stealth outfit out of north of England.
Not that stealth. They have a million,
they're stealth
wallets.
In terms of how the background of it, right? They haven't really gone out and raised institutional funding. Most people here use them as a utility, but they control a large amount of the ecosystem. I'm very keen to hear.
I think it's just at the beginning. I think right now we're seeing the obvious businesses built. People saying, oh, well, you're going to need a place to store the money. Let's have a wallet or a bank account. Or you're going to need a way for merchants to take it. Let's have a payment processor. Or you're going to need a way to buy it. Let's have an exchange. Those are the obvious ones. It's not to say they're not needed. They're very important, and there are lots of them. But I'm more interested in the non-obvious ones. I'm more looking for the altcoins and the app coins of the world that are going to do something fundamentally different. Or I'm looking for technological breakthroughs that basically look at Bitcoin and say, this globally distributed, replicated public ledger is really interesting. This proof of work is really interesting. What else can we use it for? Can we do proof of bandwidth? Can we do true PGP encryption? Can we do distributed identity using Namecoin buried in the blockchain? People who say, can we do smart contracts in some fundamental way where we obviate Nolo Press and LegalZoom and Rocket Lawyer and all those and start letting people do private contracts online. So I think we're just at the beginning. It's like you go back to when the internet first came along and just the set of ideas we had to go through. First, we had to rebuild magazines and radio online. And then we had to figure out, oh, there's this blogging thing, and then you get to Twitter, and then you get to WhatsApp, right? There's just so many layers to go. We're just scratching the surface. I think the most interesting businesses by far are yet to come. Remember the largest internet-related businesses today,
weren't around 10
Google,
years ago.
Google and Facebook, they weren't around 10 years ago. Those are the pure internet ones, and Apple, you could argue, owes this resurgence to the internet.
No, I totally agree with you.
I agree. I just want to tag onto that. I definitely agree with that. I think a lot of the opportunities don't open up until you have a number of businesses of a type in a space that, like, now you have a bunch of exchanges that, well, they all need KYC. Where's the portable KYC, provider service that these are all plugging into? Where's the, there's going to be probably the need for the, some sort of multi-sig type technology that's applied across these exchanges. And so, like, as the ecosystem grows, just new opportunities that don't make sense in a vacuum start to create some of the most valuable Y Combinator companies started as the ones that the other startups wanted to use, during Y Combinator to help build their business.
So, Naval, I'm very keen to touch upon AngelList, because obviously AngelList has embraced both the startup ecosystem, and you guys were the first to fundamentally change how the landscape to an extent sits, and then embracing Bitcoin. And there's two elements there, right? So you've got the funding, the syndicate element, and I know Ben's got a great syndicate, which has got just under, I believe, $500,000. So if you can't get deal flow, Ben's probably a good guy to be tagging along with. And then you've got companies themselves listing themselves.
Yeah, we have.
How has that worked out,
Yeah.
and how's the spike been on?
Yeah, we have about 250 Bitcoin companies on AngelList. We have about 1,500 investors who are explicitly looking for Bitcoin companies. We've featured about a half a dozen, everyone from Kraken / Payward to RoboCoin to MyCoin and so on. I also met with local Bitcoins through there, which is a very interesting play out of Finland. And then there are at least two large Bitcoin syndicates, one led by Ben, which do investments of up to $500,000. And you're going to see those scale up. Syndicates is very new. Yeah. It's not announced yet, but just today we did our first $1 million syndicate for a deal. It's a private deal, so it only went to that syndicate and their backers, so you don't see it yet publicly, but we'll announce it shortly. And it was $1 million that filled in 12 minutes, right? So we're kind of ramping up to where there's sort of these micro VCs operating online. And if you have great judgment and great deal flow, then by all means go do your own investing or lead a syndicate. But if you don't, then it's a good way to sort of back people who do have good deal flow and good judgment.
So I'm very keen to find out, I'm not sure whether you can share or not, so the people in the Bitcoin syndicates who are actively looking, were they new to AngelList? I mean, I'm guessing there was a bunch of them with the existing,
there are a bunch of them.
But was there a whole new wave of people who are like, okay, this is a platform I want to play on?
Yeah, absolutely. Because I think with what's happening now is Bitcoin is bringing new people into the ecosystem who did not consider themselves investors before. There's no question about that. And these are still reasonably sophisticated people. These aren't just, they're not just buying lottery tickets, but they are now suddenly interested in angel investing in the Bitcoin ecosystem. And they know that it's still early enough that it makes sense to band together, look at deal flow together, compare data. But there has to be a lead. Like Ben is a lead. He does the homework. He runs the XG BTC mailing list. He's got lots of amazing deal flow and judgment and insight. And one deal, I can talk about it, right? Mm-hmm. Yeah, Ben did NYBX, and I put my money in, I backed it, right? Okay. I want to see it successful. I trust Ben's judgment. It may fail. I mean, that's how angel investing is. But I don't have the time to look at or do every deal myself.
Well, angel investing should be starting off as it's going to be a failure unless everything lines up.
Oh,
so
yeah.
if you're going in with that, that's the right mentality to have.
Yeah, I mean, I look at my portfolio of 100 companies, and 90 will lose money or break even. 8 will return some small multiple, and then 2 will return like 1,000x. And that's the nature of the ecosystem.
So international versus USA is a topic that comes up a lot. Obviously, being based in London, but spending a lot of time in USA. There are companies internationally servicing the international market. There are companies internationally serving the US market. What are your thoughts on that? Because regulation, at least even from the announcements that's come out today, we're making some progress, because there was a while where nobody knew what the actual rules were. Once you know what the rules were, you can either accept them, not accept them, or try and work around them, or try and you at least have a benchmark what you're working with. That for a while, there were discussions where does it end up being like the online gambling, where USA is cut off, but it's the whole rest of the world, and the rest of the world's a pretty big place. And especially when it comes to emerging markets, whether it's Indonesia or Africa or China, there's enough of a market there.
Well, this is really a very important point. It's very scary, actually, because there's all kinds of new app coins and altcoins launching. And the Securities and Exchange Commission could take the point of view that buying an altcoin for speculative purposes is essentially buying a security. And so the people who create these altcoins may not want to issue them to US citizens. They may not want to make them accessible to US citizens. And for them, it's only closing out some small percentage of the market, but a very high hassle percentage of the market. This is, for example, why a lot of foreign banks won't take US customers. That's okay because you can get a US bank. Yeah. But in this case, you may just be blocked out from buying the next hot altcoin because you're a US citizen. So stuff like that needs to get resolved. And Bitcoin is unique in that you can buy Bitcoin and essentially invest in overseas businesses that you're never going to have any contact with, that you would never have any opportunity to invest in otherwise. I do think a lot of the better open source efforts are seriously looking at international bases.
And if you look at AngelList as a whole, not just the Bitcoin part, can you share, I'm just keen for the audience to understand how the landscape on the Angel system sits, because it's purely not US-based. I'm sure you
it's not.
International investors investing in US companies sitting in Sweden or Finland. Yeah,
we do, and we've had Belgian VCs invest in Austin-based companies, and we've had UK VCs invest in US companies, and vice versa. That cross-pollination is small, but it's high value. I'd say it represents maybe 10 to 20% of the activity. 80% of the activity is still US-based, but I do fear that the heavy hand of regulation, if not done well, could really cost us the next generation of great startups.
Yeah, I think, and that's the message that we need to be. I think the foundation is doing a pretty good job of like selling that message in Washington, but that is the leverage. Is like, what would have happened if we had put aggressive regulations on the internet in the early days, or taxes? I mean, we're still sorting through the IRS ruling from today, of course. Of course, it makes potentially,
I mean, we're still dealing with IRS or the equivalent in Europe for internet. There was a story 2 days ago, which is that the UK government in the latest budget want to now start charging VAT on digital goods. I mean, we're in 2014. It's been going on, but basically they're short of cash, and when you're short of cash, it's like, hey, and then it's, well, this is the reason the high street's now destroyed, but obviously you realize the guy who's actually drawing, or the guy or the girl who's drawing up the legislation is sitting there buying stuff from Amazon because it's cheaper than going to the high street, but at the same time going, well, hey, we can tax and we can get another $250 million then. If they're still doing that with the internet, I'm sure with Bitcoin, they haven't even started, but at least I think we've seen this one play out before many, many times.
Yeah, I mean, I think in the long run, you raise more taxes by taxing something that moves. You need a lot of things moving that you can tax. If you imply the tax is wrong, not much is going to move, and you're not going to actually raise much. So,
yeah, you let the goose lay a few eggs before you start plucking the feathers.
Well, I think, there's genuine misunderstanding at a lot of the higher levels, whether it's certain parts of the bank. And I hate to keep on going back to it, but the reason why it excites me is a very similar story to Spotify. And I actually think Spotify was way easy, and that was very tough. We've been at it for 8 years, and it was exactly the same situation. The people who you were having meetings with officially would go, this is never going to work, etc. On the way out, they'd go, this is amazing. Any chance you can give me an account? Because my daughter is sick of paying $400 a month on albums which she never listens to. This is a solution for it. Same time, I've had conversation with people in government bodies who've got relatives abroad. I met a lovely chap in London who had a relation in Central Africa, and he uses Western Union. We had this fascinating conversation that every month he sends some money there and how much it costs him, and this would solve it, right? This would completely solve that issue, but these are the people. So I think there's this education process, this fear factor, and once we overcome this, I would like to think that in years to come we could look back at this and go, well, what were we even thinking? How bad it was going to get? But I think there's going to be a natural traction that needs to take place.
Yeah, I mean, a lot of existing regulations and businesses are threatened by the existence of Bitcoin. There's been a criminalization of cash and money laundering. The fact that anything's considered de facto money laundering, you don't even have to prove that it was linked to a crime. That's sort of been a rolling back of, I think, fundamental economic rights that Bitcoin is going to bring into sharp focus. The inflationary policies of some governments, where they essentially treat the currency as the way to finance their regimes, that's going to be brought into sharp focus. Capital controls. Capital controls are difficult in a world where I can cross a national boundary with $1 million in my brain and nowhere else. These are the kinds of things I think that governments are going to be loath to give up power over, and it's going to create a fundamental discussion about some of these. There
was a really interesting tweet I saw earlier on, and I favorited it because I want to go back and look at it in detail, and it was basically along the lines of Bitcoin, yes, the value goes up and down, unlike your fiat currency, which only goes down. And that was an interesting way of looking at it, which nobody ever explains. It's something which can be used. Ben, you wanted to say something, and then I know we want to open up.
Yeah, I wanted to say, well, I wanted to can I get a poll of hands of like who's startups in the room? Great.
Cool.
So I want you to look around. Those are not your competitors. I'm guessing most of you realize that, but if you haven't internalized that, these are not your competitors. These are your opportunities to partner, to perhaps merge, acquire. All these people have much more stake in you succeeding than in failing. Your competitors out there are, legacy financial services, and at the end of the day, consumer indifference.
Yeah.
Like
your main competitor is the 5.9 billion people who don't even know how
Exactly.
to or why to or what a Bitcoin is, or things that Bitcoin went out of business when Mt. Gox crashed.
So I'd love to just like have that rallying cry to like, I'd love to see so much more. I mean, and there's a lot already, but just collaboration, getting together, because we're essentially all in the same boat here. So
yeah, I've been in Silicon Valley now for 15 years. No, sorry, 20. Ouch. And so I've been watching kind of the development of tech businesses through that big bubble in 1999 and now. And it's a very cooperative industry. People cooperate, people compete, and they're kind of always shaking your hand while kind of looking over your shoulder as to how to get the advantage on you. The Bitcoin community is the first time I've seen that dynamic be really much more about cooperation and competition. And I got to hand it to Satoshi, whoever the heck he or she was or they were, just engineered the most brilliant pyramid scheme I've ever seen. No, it's not a Ponzi scheme.
we have that on record.
No, it's not a Ponzi scheme, because a Ponzi scheme
Right.
would mean that later investors pay out the earlier ones. It's a pyramid scheme in that there is a benefit to early adopters, and it sort of unites them on the same. It's a pyramid scheme that's designed to get all the smart people, the cryptographers and the financiers and the hackers up front.
There was a benefit to early adopting gold as well.
Yeah.
I wasn't born
You
with
weren't
any.
around then. Questions, please. Who's got any questions here?
Yes, Naval specifically. Have you thought about using colored coins or Bitcoin investments to kind of like add a liquidity level on AngelList? Has anybody come to you about that? Do you see that being something that might happen in the future?
Yeah, I'm not sure I fully understand the question. So is it about enabling people to pay with Bitcoins, or is it investing by basically buying these coins?
Right, so whether it's like BitShares or Havelock Investments, like there's a couple sites where like there's seed companies go to them and they say, we're raising, we're doing a over-the-counter IPO. We're going to raise like $200,000 in Bitcoin, and begins trading as an over-the-counter IPO.
Yeah.
Right now they're based in Panama. It's probably not like regulatory.
Yeah, it's still a security. I mean, if you start treating it that way, it is a security and it'll be covered by securities law. So I don't think you can get away by trading a security and pretending it's not a security just because it's a different name. I don't think the SEC will look kindly on that. That said, believe me, if there's a regulatory compliant way to buy shares in these altcoins, I'm going to find it.
If I were going to issue colored coins, I would be watching closely what the SEC is going to do regarding Satoshi Dice.
My guess is you're going to see these people issuing their coins from foreign jurisdiction and not being available to U.S. investors. It's going to be very difficult for a U.S. investor to get their hands on most of these coins.
But Naval, once these things are on the blockchain and you can swap
That's
them, right? I mean, how do you?
This is what I mean.
You
Like
can't really block.
A lot of these notions are obsolete.
Yeah.
I think we have somebody at the back there. We will come to you at the front.
How do you guys assess a sustained comparative advantage when you're looking at Bitcoin startups to invest in?
Sorry, could you repeat that? I didn't get to it.
What is?
Naval, you mentioned when you're looking at Bitcoin startups, one of the key attributes you look at is sustained comparative advantage. And I'm just curious how you guys assess sustained comparative advantage when you're looking particularly at Bitcoin startup in your investments.
How do you find a sustained comparative advantage in a Bitcoin startup? Well, I can think of two ways. One is, and there are more, it's not exhaustive by any set of the imagination. One is there would be some fundamental technological innovation that makes it hard to copy them. Like that's why I like the smart contract space, because no one has yet defined that. It's technologically sophisticated and difficult. And this is a chance for all the cryptographers to shine. If you're doing a serious Bitcoin company and you don't have a great cryptographer on staff, then you're probably not innovating on the technology side. So I think that's one area. The other area to build comparative advantage is there are still a few places where network effects apply. So for example, an exchange can have network effects around liquidity. A social wallet could have network effects around how it spreads and you trade things with each other. A payment processor and a wallet holder could have a network effect because they could do fast clearing on their own internal wallets and offer credit and things like that. So you're just looking for some kind of sustained comparative advantage. It can either be because you did something really difficult or it's an emergent property of the network that you're building.
Yeah, I don't have anything to add to that.
The only thing I would add to that, and take it as a joke if you want, is I'm trying to not invest in any more companies which have got the word bit in it. Seriously.
Or coin.
We really need, no, that one I've already invested in, so that one I can't get out. But I think we really need to move away from companies with the word bit in it, because it's tough enough as it is out there, whether you're dealing with regulators or banks, and you know, we get inbound emails, and there was somebody who was completely unrelated. I think it was a specialist builder who'd done some work for somebody who was involved in Bitcoin, and when they wired him the money, when you put the reference in the UK as the payment reference, I think they put in, you know, payment from BitX Limited, and his bank shut his account down, and he went down there. They're like, "You're involved in Bitcoin." He said, "I'm a builder. I do chimneys, etc." They're like, "Well, our systems picked up that you're involved in Bitcoin because there was the word bit and etc." So I think, you know, I just wanted to throw that out there. And I walked around outside, and there's so many badges which have got the word bit in. We need to kind of move a bit away from that. And I will give a I will give a little plug on CoinDesk. There's an article the other day by a guy called Adam Hanft, who's a brand strategist who actually wrote an article which was Bitcoin needs its got milk moment, that, you know, for this to go forward, be adopted by mainstream, you know, there has to be a centralized, there has to be some sort of branding element, and you wouldn't see every search or every internet company is no longer called internet or even has the word .com to it. There was a time where every company had kind of rebranded themselves to a .com, so I think we just need to...
Yeah. And then there was the E version, because you put the E in front of electronic
e-shopping and
version.
e-search. So
sure,
we could do that.
Yeah.
.com.
I did
E-coin BitPay, so that worked pretty
So
well.
what are you renaming CoinDesk to?
Just desk.
Just desk.
E-desk.
E-desk. There you go.
So there's one more.
Oh, we have a microphone there for you.
So, yes, well, in my opinion, we're living in a time of war. There's a lot of war going on out there. Coming out of the U.S., by the way, if one looks at drone strikes, et cetera, in Russia and Ukraine. So I get this question from a friend of mine in New Zealand. I thought I'd put to you. What's to prevent governments from, like, doing filtering of the IP, all the packets and so on, the carrying of Bitcoin transactions, et cetera, or shutting down part of the net? When I try to convince people to use Bitcoin, I run up against this question. Hey, it's running on the net. If the net's shut down, I can't do transactions. What do you think?
Can I answer just one part, and you can answer this? If the net shuts down, we are way more fucked than losing our Bitcoins. Right?
Yes, but the net can be partially shut down.
Losing my Bitcoins is the last of my worry if the net goes down.
No, but that's an extreme.
Everything else is going down with it.
Where are you going to look at cats and...
No, you're missing the point. The thing can be filtered.
Yeah, I'm not... So I think people have tried to kill BitTorrent, and they've tried to kill Tor, and the fact that those systems are resilient, even though they don't have huge economic incentives to, like the miners do, to provide transaction availability is a good foreboding. It is a good thing for Bitcoin. I think BitTorrent and Bitcoin are sort of these distributed networks that are semi-autonomous and alive almost, and sort of very hard to kill. Yes, you could always kill it by taking the entire net down, right? Like Iran could take the net down, or like Twitter, you know, Turkey tried to turn off Twitter. In theory, it could happen, but I do think we are approaching a day and age where the net itself is unstoppable. It's as important as the electric grid, and maybe we don't necessarily believe that, those of us with gray hair, like myself included. I can imagine a world pre-net because I lived in it, but our children won't. They won't stand for the net being shut down. To them, shutting down the net will be like turning out the lights. What are you doing? That'll be chaos in the street. So I don't view Bitcoin as a 2-year bet where within 2 years it and the net have to hit escape velocity, but it's an inevitable sort of thing. 10 or 20 years from now, the idea that you would be able to turn off the internet is going to be absurd. And I think people like China actually are going to be in a very interesting dilemma, because they're going to find that a lot of the software on the internet is fundamentally interconnected with Bitcoin as its core payment mechanism. If I'm a hacker living in Vietnam today and I'm writing an app that needs to send or receive money, I'm not going to go and try and get an API to a bank. I'm just going to put in Bitcoin. So we're going to see a future where Bitcoin is embedded into most of the software that runs the internet. And it's going to be impossible to operate a firewall that then has to kind of decrypt or drop out encrypted packets and still yet somehow be first world compatible. So I think entire nation states will have to make the choice that either I'm stuck in the 2010 internet or I'm going to be in the 2030 internet, and it'll have a material impact on their GDP.
Yeah, I mean, I think Bitcoin, it epitomizes the idea of an anti-fragile system. This is Nassim Taleb's concept. You know, any attack against it or you know, other sort of failure ends up making the system stronger ultimately as it routes around damage.
Yeah, I don't know if
I agree. You can't take the net down. You can partition the net.
Yeah.
And you know what happens is, well, the people who have nodes on that partition, they're not. It's going to take them a long while to get blocks happening because there's not going to be any miners on that partition. And you know, but ultimately the blockchain will still there. What the blockchain is a record. It's a history, and you know, we have already seen, you know, last year we saw an issue of a fork where we had essentially an outage of the Bitcoin system for probably 4 or 5 hours while the fork was resolved, and the end result of that was actually, you know, a demonstration of like the devs getting together and figuring out what to do and resolving the problem, and led to a stronger sort of ecosystem of knowing how we would address such problems in the future. So I don't know
if you guys have seen Open Garden, but there are projects out there. Open Garden has there's a company that does a mesh network on Android. So you take your Android phone, and you can do a hopping mesh network to